Exchange traded funds, how are they doing so far? Well, you got beaten in the last month with crypto, didn't you? Not only that, you've had a bit of a hit in a few of the others on the reds. I'm not a massive fan of just looking at things over 1 month. Save this for later, by the way, and you can always rewind and look at it. Put it in the comments if you want more of this and more analysis on ETFs, or put less if you want less of this. What interests me in this is exchange traded funds are ideal if you want to have slightly lower drawdowns. But here's the mistake. What's happened is people think, oh, you can just buy them and forget them. Well, actually, there are prolonged periods of drawdowns. There's something called the Ulcer Index, which roughly speaking is the level that something falls and the duration for which it falls. Exchange-traded funds might not be as bad as Meta in 2022, which fell 75%, albeit for only 1 year. They might not fall as far, but they can have long durations of underperformance. So the blind premise that I'll just buy some exchange-traded funds, so-called index trackers, buy, hold, and forget, actually hides a lot of problems. One of those problems being you might just for a prolonged period of time be performing rather poorly or mediocrely, and you could have done better for the risk appetite that you have. And that's a major problem, certainly for your pension, certainly because UK government data and US government data shows that a majority of people have less money saved for their old age than they should have. Well, put another way, they're getting less growth. Governments never say that. They say less saved. What they should say is they're getting less growth. But that would mean blaming fund managers, which governments don't do for whatever reason. Anyway, like and save this. If you want more videos on exchange traded funds, as I said, put in the comments more. If you want less, I'll do less. Thank you.